everyone, Adam Harris here, and it is Sunday the 8th of November 2020. So having a look at the major global indices. So the first thing that I want to mention here is just by looking at the dollar. So in terms of technical analysis, there's a kind of a uniformity that has occurred across all the asset classes over the last few days. And a lot of that is actually driven largely by a weaker US dollar. So a bigger move to the downside over the last few days on the US dollar has resulted in, Euro, GBP, Aussie climbing. Also resulted in gold getting a bit of a boost. A lot of the metals getting a bit of a boost. Even oil got a bit of a move up later on that. We've even got cryptos climbing a bit. Which now leads me to the kind of global indices, and they've had a really nice boost of it. So a combination of optimism, I guess, as well as a weakening US dollar has resulted in a relatively nice boost over the last week. However, so starting off with the Dow, my biggest issue here is a big move up here without any kind of a retracement. I really have to say for future traders and for myself in the future that the markets handled the US election with grace. There's no other way to put it. The volatility was smaller or less than when the UK went through the whole Brexit referendum. And so I just think that's absolutely incredible. And it wasn't intentional, it was just the end result. So I think that's amazing and noteworthy. So here's my issue. This little orange box that I've drawn in here was effectively where I was marking in the kind of area of volatility or the range in which I was expecting the market to stay within. It's still effectively within that. And so we've had a big move up here. Now there's strong resistance at 29,000. So this is what I'm going to be looking for this week. I think the markets in principle are keen to kind of go up. But after a big move like this, to be able to break through that level is very unlikely. Not impossible, but unlikely. It's a really solid bullish week. Collectively, if I put these two together, that's an outright rejection of the lows. That's very nice, really relatively bullish, but the close would be high. So this would be very similar to almost like a hanging man. And that can indicate that we're kind of at the top of a move. Okay, the monthly looks beautiful. I like breakout and a retest of this, but it's still within this range. So what am I saying here? I'm saying that I think it's going to potentially struggle initially to get through this level, and I'm really focused on this week. In the longer term, I'm not really sure. I'll deal with that next week, but for this week, I'm going to be looking at the market to attempt to continue up, potentially hit 29,000. So it could actually, and a retracement at any point would be good. So if there's a bit of a pullback for a couple of days and then a recovery, or alternatively it continues up and then has a bit of a pullback. So that might mean ultimately that we finish somewhere in this last half by the end of the week if we have a pullback first and then climb up, or whether we go up and come back down. But the point is that overall it's nice and bullish. If I then go on to the S&P, and I think now more than ever, I have to combine collectively the Dow, the S&P, and the NADEX together, because collectively they represent pretty much all the kind of all the sectors, and they're a fantastic global sample collectively. So NASDAQ would be technologies, S&P would be everything. In fact, I could even take the Russell 2000 and throw that in, and that would be about as good a thermometer you can get for global health as anything. So just mentioning here, the S&P pulled back, found support into the previous highs, turned around, and is finishing back up at its highs. So this is the problem. It's had a big move up, a lot of energy expended, cannot continue on. So there might be an attempt this week to try to stay a little bit higher. But if it does ultimately reject those levels and come back down, that would make complete sense to me. It's a really nice bullish candle, but it failed to break past this level, so it stopped at that level. So this is really what I'm really looking for this week. In principle, as I said, I'm generally bullish, but these levels are effectively what has to be overcome before I can kind of relax again. The NASDAQ, producing that sort of higher low. Let me just go and highlight on the week what my kind of expectation was. I've spoken about this for a while. I'm still of the opinion it doesn't matter. It's not about having to be right. The market is absolutely overvalued, and the bill or the check will come due when it does. I would just prefer that if we had a bit of a correction now, it isn't going to be as bad as it is going to be when it happens. But it was due. It's always going to happen. We're going to have it every 5 to 15 years. This is very bullish, and again, it's testing that 12,000 level, so it's going to be the same type of issue here. But of the three, historically speaking, the NASDAQ is the strongest, And, you know, if the NASDAQ fails, that's generally an indication that everything else is going to go. It's still kind of, for me, is the kind of a big indicator there. So I highlighted here a while ago what I would like to see happen. Any kind of a pullback into towards 10,000 potentially, and then turning around would qualify in my mind as a nice, healthy retracement. In the meantime, I've got to see how it copes with these levels. So I am cautious this week because of those key levels. I need to see what happens with the market. Does it push above those levels and then pull back, and then we continue onwards over the next few weeks? Or do we find that it fails to get through these levels and comes down and falls hard, and then we kind of have maybe a couple of down months, and then the Santa Claus rally comes in, and then maybe there's a bit of a boost sort of late December, January in through till March, sort of early next year. So that's what I'm going to be watching out for. And it means probably watching the 4-hour time frames to see if the market starts to head down, back down to these key levels. I'm not going to get overly committed to any one direction, but much rather either shorter term opportunities, anything on the 1 hour and below, taking profits as I go, because we're not free of this range yet, and it could, in all kind of what's the word, validity, could honestly just could go in either direction. But the point is, it's currently looking quite nice and bullish, but at the same time it's overbought. So let's have a look at the Russell 2000. Russell 2000 looks really nice on that kind of the weekly time frame. Looks pretty good. I'm pretty happy with that. And the monthly is a little bit kind of coming back up into these previous highs. That actually looks okay. The FTSE as well. Good to see that kind of breaking back over this level. I'm not, and that kind of that shape on the monthly could be a potential flaw. So that is pretty interesting to me. But in order to really buy into this, I'd have to see it kind of break these previous highs. I would then have to go above kind of 6.5 for me to kind of jump in on that. I'd have to see this downtrend officially kind of broken. But it's a good start. It's a really good start. So again, this week, I'm leaning towards seeing how the markets, if they can attempt to climb higher. Then having a look at the DAX, it's pulled back into these previous lows. It's produced a bearish candle. This could be a swing high, similar to oil, could find itself heading lower. So there are signs that a move lower is a possibility, but I need to see that actually happen. So again, we've now got the French CAC hitting resistance at 5,000. Can I get back over it and break above these highs, or is it going to fail to do that and then finish lower? But that is a pretty nice bullish rejection of the lows, more bullish than bearish at any rate. Doesn't mean it's going to succeed from here on out, but it means that it was a good rejection. And very similar here as well on the Euro stocks. Big solid bearish candle, didn't break the low so far, is completely up. Look, we're still in the first, just out of the first week of the month, so the whole monthly candle could ultimately change on that, but it's so far I really want to see what happens with that. So it's going to be watching, for me, it's going to be watching these key levels of resistance to see if we get past those. The neck high followed through on that. It's been, really has been one of the best performers in the background. Just looking nice and bullish. It's broken up through those highs, but it really, I want to see it get past that. So I'm just mentioning here that as we head away from the US, there's this bullishness across multiple markets, which is pretty cool. Now, this one is also worthwhile. This is the ASICS Australian one. It's produced a higher low. So if we break these highs, we'll go into a confirmed uptrend. And that's interesting to me because that would be a shift to a bullishness. Then there's also that resistance at 6.2. So it's got to get over that. So again, resistance in play. Let's have a quick look at something like Tesla. Tesla's still overvalued, in my opinion. It's well overvalued, not even a little bit, but very much so. It needs to come back down. So I'll keep an eye on that because, of course, if that starts to head low, then that'll start to shut. But Google is healthy as anything. Google's the most bullish of the bunch. Apple, it's not that far from the moving averages, but again, it really should come back down to test this level. So it means that although I'm in the shorter term, I'm leaning towards bullishness. I'm going to be more cautious in the medium term and longer term. I don't feel that we've had enough of a correction on the monthlies to justify a much, as though we're at the beginning of a new bull run. I'm not quite there yet. I need to see that. So I'm cautious as we head up and we test the highs around those key levels. I'll be very cautious. Again, intraday trading only for me, no swing trading positions at this point in time. Very kind of keeping my cards close to my chest and if we start to break down on these lows, then of course I'm prepared for that. But it's all about how the markets react to these highs. If they're able to solidly break and hold above them, then that bodes well for the future. Thank you very much. Have a good week.